The Property Pod. Welcome to The Property Pod with Moneyweb. The property sector is an ever-changing sector. And in this podcast series, your host, Suren Naidu, chats to movers and shakers in the property industry.
A hearty hello and welcome to The Property Pod, South Africa's premier property investor podcast. Yes, there seems to be genuine optimism abound on the JSE and the country generally, following President Cyril Ramaphosa finally revealing his Government of National Unity cabinet on Sunday evening. My name is Suren Naidu, and on this weekly podcast show, we gain insider insights from leading CEOs, analysts, developers and entrepreneurs in the country's expansive property industry. We generally do a listed property or SA REIT wrap performance-wise for the year-end and half-year, but this one is a bit more exciting. SA REITs did not just have a great month in June, but are up for the first half of 2024. However, there could be more good news considering the surge in the JSE on Monday, with listed property stocks being amongst the big gainers on GNU optimism. To chat about SA REIT's first half performance and expectations for the second half, we have Evan Robbins, listed property portfolio manager at Old Mutual Investment Group, on the podcast. Evan, welcome to the Property Pod.
Thank you.
I think it's your first time, even though we chat for comments, but it's your first time on my podcast, so really appreciate it. Evan, how did the SA Property Index on the JSE end the first half of 2024 on Friday? Which were some of the top performing stocks, either share price-wise or total return? I'm not sure if those stats are out or finalized as yet.
So the sector was up around 8% over the first half, which might be less than you would guess if you didn't know anything, given the news flow and moves we've had in South Africa. Many other sectors, local sectors, actually were up similarly. But I think we have to look at the SA property return for the first half in the context of how it did last year. In 2023, it was a stronger sector. It was specifically strong in the final quarter of 2023. So even following on that, it's still given 8% this year, which is a decent outcome. That's for the first half, and obviously a bit more after the announcement we've just had.
Even tell us what contributed to the optimism in that first half, because the JSE itself was 3.6% up overall.
Yes. So I think the South African news flow improved. So a lot of the strength came in actually the last couple of weeks in June. So if you looked at it before then, it would have been a less positive outcome. In fact, it would have been just positive if you exclude the period. And in fact, we've actually, it was even stronger in the middle of June. It's come off since the middle of June. So we were even stronger number, at its peak optimism, you can say. What influenced that was bond yields, but property actually strengthened against bond yields. So even considering the movement we had in bond yields, probably was even stronger than that over the 6 months, which is positive. In other words, market seeing less risk and better growth prospects than it would have seen in the beginning of the year. And I think what we are seeing is a gradual improvement in the SA property fundamentals from what was very weak to no longer deteriorating, and that's slowly being recognized by the market. So it's justified to that extent. The move we saw last year was on bond yields. The market got quite optimistic about interest rate cuts, which influenced property prices at the end of last year. And I think the market's also getting more optimistic on interest rate cuts at the moment, which is also part of the bond yield story, which is also feeding positively into the price movement we've seen in listed property.
We'll get into more detail on interest rates shortly, but how now with this GNU optimism, how significant is that expected to be? I see Redefine jumped around 5% in morning trade on Monday, and Growthpoint was also up together with a few other REITs. Generally, the banks and the listed property stocks seem quite positive, including the retailers, about this GNU announcement.
I think property, the main beneficiary, is via the bond yields. In other words, if the market sees less political risk, less economic risk, that positively affects bond yields. If bond yields reduce as they have, that means property prices go higher. In fact, prices of all assets go higher. So that's the major driver. You'll pay more for property because there's less risk perceived. In addition to that, and connected to that, if you've got more economic stability and you've got a stronger currency, that should positively affect inflation, which provides more scope for interest rate cuts, which further enhance property in terms of the earnings and bond yields are a function of a future interest rate environment as well. So on that mechanism, there's a strong link, and I think that's a major one investors to look at. There's obviously a growth link as well. One reason why the property market has been so weak is because there's been no growth in the SA, which obviously means office tenants, among other reasons, retail weaker than other would have been, etc. I mean, quite obvious dynamics there. An increase in growth would affect property, but property is slow to react to that. I mean, it affects on the margin, but they're long leases. Property is a defensive in the sense that things tend to smooth over. So that is certainly positive, but that's a secondary effect. And I think it's quite a jump at the moment. From the news flow at the moment, you start speaking about big structural changes and increased growth rate. I think the major positive is that a negative tail risk that could have happened hasn't eventuated at the moment, and the market's relieved about that. So unpricing some of those risks that were there on that chance. So that unpricing has enhanced the market, because had that happened, bond yields would have gone up very high and investors would have exited, which would have been bad for property. So the market's just a bit of a relief on that. I think it's probably too early to start pricing in big good news. We'd have to see about that. But there has been some of the movement, certainly recently, can't just be explained by bonds. So the market is pricing in a slightly higher growth outlook, but I wouldn't make too much of that at this stage in terms of the market pricing.
You actually went to my next question. I was going to ask, is it too early to say? So you're not expecting a rally in REITs, as it were, this year, are you?
I think the fundamentals were improving before, and even some of the South African fundamentals were also improving before. I mean, let's take load shedding as the most obvious example. If that continues to be better than many had expected, there's a positive. So there were some positive SA elements that were showing tentative signs of improvement. So to say that that continues, that's positive, and that's regardless. But I think the slow improvement in property fundamentals has gone relatively unnoticed because interest rates have been going up over the same period, or their effects in earnings. So if you look at property company earnings, there's nothing exciting about them. In fact, some of the major companies have shown a decline in earnings simply because the interest rate cost increases of it out have trumped the slow improvement in fundamentals. So even though property income has been growing, you haven't seen it because the interest rate expenses. If that starts turning, we'll start seeing property companies showing the benefits of that. And I think that could improve sentiment and show the sector is healthier than many have perceived it and have experienced over recent memory.
On that interest rates topic, they're clearly waiting with bated breath for those interest rate cuts. There are some expectations that it might not be in July or this month, but possibly in September and or November. What are your expectations on this? What sort of impact would it have on the sector, because it's coming towards the latter of the year?
I think the actual level of bond yield, which I mentioned earlier, is far more important because that determines capital value. Interest rates help in the sense that they would take earnings pressure off the property companies and their floating rate debt will reduce. So it helps earnings. But that helps, but I don't think it's a major determinant. It is a major determinant of sentiment. I mean, it's sort of a knee-jerk to buy property when interest rates go down because of those reasons. But in terms of longer-term fundamentals, it's less important than actually the risk environment of the country as a whole and the growth environment.
What are your expectations for the second half of the year? I know you kind of have covered it, but perhaps you want to highlight also some top stock picks that are likely to benefit sooner from some of these positive around GNU and that sort of thing. I know the likes of Vukile, the retail funds, have done a little bit better than the funds like Growthpoint and Redefine that have a mixed property portfolio of office, retail, industrial and others.
Yes, I think the earnings should start improving, not necessarily this year. I mean, because of the late impact of interest rate hikes. There's still debt that was taken at lower levels that has to be reset at the current levels. But we should start seeing forward-looking, and the market should be forward-looking, growing earnings from currently some negative earnings that are still expected in the base. So that will be positive across the sector as that slowly starts feeding in. And we could very well see some of the most beaten up companies potentially, if things do improve and very bullish scenario and the risk priced into those companies, including on gearing, they could be beneficiaries of any change in sentiment because they're the most vulnerable. That's not an impossible scenario.
Can I put you on a spot? Can you give us maybe 2 or 3 stock picks that we should look out for the second half and overall for 2024?
No, I'm not going to give stock picks.
Okay. No worries. Evan, appreciate your time on the podcast today. That was Evan Robbins, listed property portfolio manager at Old Mutual Investment Group.
Thanks for listening to the Moneyweb Property Pod with Suren Naidu. To listen to more episodes, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates. Follow Suren on Twitter @Suren Naidu for more of his property industry content and other business stories. The Property Pod.